How did Rocket Lab's 2025 shift to Rocket Lab Corporation with a Delaware holding company, a government security committee, and approximately $865.5 million of at-the-market equity issuance support alignment with U.S. government security requirements and a profitability target around 2027? Under Delaware General Corporation Law Section 251G, Rocket Lab Corporation became the NASDAQ-listed parent on May 23, 2025, with each Rocket Lab USA share converting to one new share on a one-to-one basis. Rocket Lab USA then became a wholly owned subsidiary and the board and management remained unchanged. As of 2025, Rocket Lab's board comprised 8 directors, 7 independent under NASDAQ rules, including lead independent director Merlin Saintil. Board committees covered audit, compensation, nominating, and corporate governance, plus a government security committee chaired by retired U.S. Air Force Lieutenant General Nina Armagno. Operationally, Rocket Lab reports Launch and Space Systems segments. In Q1 2025, Launch generated $35.6 million, while Space Systems produced $87.0 million, roughly 71% of total revenue. By Q3 2025, Launch contributed about $41 million and Space Systems about $114 million, approximately 74% of company revenue. Here's the shift. In March 2025, Rocket Lab established a $500 million at-the-market equity program. Then in September 2025 added a $750 million program for total authorization of up to $1.25 billion. By September 30, 2025, those at-the-market programs had raised approximately $865.5 million in gross proceeds. Over the same period, stockholders' equity increased from about $382.5 million at December 31, 2024, to roughly $1.28 billion by September 30, 2025. Economically, Rocket Lab reported total liquidity of more than $1 billion in late 2025, largely as a result of its 2025 at-the-market equity issuance. The trade-off, funding capacity, came mainly from issuing additional common stock. Here's their position. Rocket Lab stated that the 2025 holding company reorganization aimed to improve alignment with U.S. government security requirements, streamline management of subsidiaries in the U.S., New Zealand, Australia, and Canada, and increase flexibility for mergers and acquisitions. Prior to a late 2025 Space Development Agency award, Rocket Lab reported a contracted backlog exceeding $1.1 billion, providing multi-year revenue visibility. In late 2025, an $816 million award from the U.S. Space Development Agency further increased that backlog. Rocket Lab's Government Security Committee, chaired by Lieutenant General Nina Armagno, oversees compliance with national security obligations such as FOCI mitigation and classified work. The company has indicated a target of reaching break-even or profitability around 2027, funded in large part by equity issuance to develop its Neutron launch vehicle and satellite programs. In Q1 2025, Rocket Lab recorded $122.6 million of revenue, representing 32% year-over-year growth versus Q1 2024. Q2 2025 revenue was $144.5 million, up 36% year-over-year, while Q3 2025 revenue reached approximately $155.1 million, representing 48% year-over-year growth versus Q3 2024. For Q4 2025, Rocket Lab guided revenue in the range of $170 to $180 million, implying full-year 2025 revenue of approximately $590 to $600 million at the midpoint. Looking ahead, that guidance frames the company's expected 2025 revenue scale. Rocket Lab's long-term debt in late 2025 was approximately $456 to $510 million, including about $355 million as of 2024 convertible notes and roughly $120 million of equipment financing, with no major new debt issued in 2025. Aggregated 2025 filings showed around 981 institutional filers holding about 314.6 million shares, while Peter Beck's total 2024 compensation was approximately $20.1 million, a CEO pay ratio near 2.80:1 versus median employee compensation of $71,800. Economically, these capital and governance structures support the stated 2027 break-even objective.